Why do some investors get rich while others lose over and over again? Now, with over 12,000 stocks out there, most beginners are overwhelmed and misled. But what if I told you that the wealthiest investors aren't smarter? They're just following a repeatable system. And today, I'll show you how to copy it. Now, in a minute, I'll show you how our community uses one simple scan to find consistent winners. No guesswork, no hype. By adopting our system, you can accelerate your wealth growth beyond whatever you thought possible. Now, I remember my early days refreshing my broker app every 10 minutes, wondering why nothing I picked ever went up. Of course, today is very different. If you're like most new investors, you've probably tried to figure it all out on your own. Scrolling through charts, watching endless YouTube videos, reading blog after blog, jumping into hyped up bargain stocks that look like they're about to explode. But the result? Loss after loss. Confusion, frustration, and that sinking feeling that maybe you're just not cut out for this. The good news though, it's not your fault. You've been sold a lie, that investing is about getting in early on cheap stocks or mastering flawed strategies like day trading. But here's what the smart money knows. The real path to getting rich in the stock market isn't about catching falling knives or chasing false trends on social media. It's about investing in stocks that are already rising and rising consistently. Makes sense when you slow down and think about it, right? Okay, so let's break it down. Over the past 10 years, the S&P 500 has grown around 140%. That's not bad if you look at it in isolation or through the eyes of your favorite influencer who in reality doesn't really know anything more than you do. However, look at individual stocks and you get a very, very different picture. Berkshire Hathaway, for example, up 270% in 10 years. Progressive, up 900%. And Nvidia, well, that's up a ridiculous 22,000%. This is what the smart money invests in. Stocks in a clear, long-term uptrend and that are moving up faster and further than the S&P 500. These are the stocks that outperform the market index, enabling us to achieve returns well above the average. The true skill lies in identifying these opportunities and knowing how to maximize their potential. This is the hallmark of a seasoned investor. And here's the thing, the best techniques are straightforward to learn and execute. The challenge is being consistent with the process year after year. In a minute, I'll show you how our community uses one simple scan to find consistent winners, no guesswork, no hype. In our community, we follow a trend following strategy. Why? Because it's simple and it's repeatable and it consistently outperforms the market. While most investors hope to match the S&P 500's average 11% annual return, we hit an average of over 30% per year. Let's put that into perspective. If you invested $1,000 in the S&P 500 in 2005, you'd end up with around $8,500 in 2025. But at 30% a year, that same $1,000 turns into over $190,000. That's a $181,000 difference. Now, that's not just a return, that's a whole retirement plan, a house, a future. So the question is, why doesn't everyone do this? Well, they're repeatedly told they don't have the time or the ability, often by people who've never learned to do it themselves. From my experience, whenever I explain my process, people often dismiss it outright because it seems too simple. Even with a proven track record that had our hedge fund approved in Luxembourg in 2023. This isn't back-tested or theory, this is a real proven strategy. Most investors want complexity. They think if it doesn't hurt their brain, it can't possibly work. So instead, they use mind-numbing fundamental analysis methods to go bargain hunting, looking for stocks that have dropped 50%, 70%, even 80%, thinking they're getting a great deal. But here's the truth. Most of these stocks never recover or take an absolute age to recover. Let me show you some examples. e.l.f. Beauty shot up 3,200% between 2019 and 2024. Incredible growth. Then it dropped from $221 to $142, a 35% dip. To most beginners, that looked like a discount, a golden opportunity. But but 5 months later, it had dropped 76% from its high. This is what happens when you buy falling stocks. They don't magically rise, they keep falling, or if you're lucky, stay flat at best. Nike's another classic example, a brand name that we're all familiar with. It peaked at $179 in November 2021. Today, down 69%. You see, buying cheap can work when you're running a retail store, but investing isn't retail. There's no guarantee the stock you bought at the discount will ever go back up. Instead, you're making the classic mistake of catching a falling knife. And by the time you realize that, your account's already in the red. And getting back to break even alone is a huge challenge. Now, let's talk about what actually works. Smart investors start by identifying the sectors that are performing well. Why? Because strong stocks live in strong sectors. Again, makes sense when you think about it. From 2014 to 2020, energy was in decline. And between 2014 and 2024, it was stuck in consolidation between $172 and $738. Basically, dead money. Meanwhile, information technology was soaring, up over 700% in that same time frame. That's where the winners were. Once you know where to look, the next stop is having the right tools to find the best stocks within those sectors. Now that's where a scanner comes in. We use powerful proprietary scanning software that sifts through thousands of stocks daily based on our strict trend following criteria. When we find stocks making consistent higher highs and staying above the 200-day and 200-week moving averages, those are our candidates. Take Cencora, for example, a healthcare stock you likely have not heard of. Here's a pro tip for you. Stocks that make true wealth will never be found in our media channels. Cencora is a great example of a stock that respects the 200-day and 200-week simple moving averages. It consistently makes higher highs and higher lows. It doesn't react to market noise, it just keeps climbing steadily. While the news screams market crash, these stocks quietly go up and up and up. And here's the best part. Every week, our scanner gives us a short list. Then we manually filter through them to find the absolute best. Again, no guesswork, no emotions, no hot tips from social media, just data, rules, and proven results. You are now what I call at the point of no return. You have two choices: step up and adopt these new processes, or continue doing what ultimately doesn't work and keeps you underperforming. Most new investors will ignore this system. They'll go back to chasing cheap stocks and swing trades and Reddit hype. Ultimately, they'll keep losing. But the smart money, they stay focused. They buy what's going up. They ride the trend and they win. And very handsomely with the power of compound growth in our favor. Look, I used to be where you are, confused, frustrated, watching my portfolio ultimately bleed out. But once I stopped trying to reinvent the wheel and started copying the smart money, everything changed. I stopped day trading, I stopped bargain hunting, and I committed to a strategy that actually works. Now, we help other working professionals, business owners, and everyday investors do the same inside our private community. They're building wealth, growing confidence, and compounding returns year after year. And here's something most overlooked, arguably the most important fact of all. The stock market isn't just about money. It's about freedom. Freedom from stress, freedom to walk away from a job you hate, freedom to build a life on your terms. And you have developed a set of skills that you can pass on to your kids and loved ones to continue the excellent work you have started, breaking the financial illiteracy loop forever. Because let's not mince our words, the schooling system is not going to do it for you. Your kids will be stuck in the same situation in a more challenging world if you don't get on top of this. The buck starts with you. This is your legacy. But none of that happens if you're losing money buying cheap stocks or stuck in the chaos of short-term day trading. Change only happens when you have a proven strategy, a long-term mindset, and a community of like-minded investors to support you. That's what we offer. That's what we teach. So the next time someone tells you the only way to get rich in the stock market is to buy low and hope it goes back up, well, do what I do. Just smile, because you know the truth. The real money isn't in hoping. It's in following trends, stacking probabilities, and letting time do the heavy lifting. The key to growing real wealth in the stock market isn't chasing hype or bargain hunting. It's about following trends, focusing on strong sectors, and investing in stocks that are already rising. But here's the thing, knowing what works is just the first step. The next step, finding those top performing stocks, the ones quietly climbing while everyone else is distracted. And believe it or not, with the right tool, you can find them in under 3 seconds. In this next video, I'll show you exactly how our scanner works, how it filters thousands of stocks instantly, and hands you a short list of winners.